with interest rates being at an all-time low. Have you thought about refinancing your home mortgage? In today's video, I'm going to give you 4 things to do to help you answer that question. My name is Malachi Vandermark, and I'm known as the Realist Realtor. I give it to you real, backed by facts. So in today's video, we're going to talk about refinancing your mortgage. Disclaimer, I'm not a lender or a mortgage broker, so if you do have specific questions, reach out to me and I can connect you to one of my lender partners. So there are 4 things that I think you should start out with. 1, just like you did when you first bought your house, do not open any new lines of credit. No new credit cards, no car, no furniture, nothing. Do not open a new line of credit. Easy peasy. With that out of the way, let's move on to the second thing. The second thing is to shop around. Don't feel the need to stay to whoever's carrying your mortgage right now. So if Bank of America is carrying your mortgage now, don't think that you have to necessarily use Bank of America. Feel free to shop around. Go to other major banks, go to mortgage broker, or even ask your realtor. So moving on to number 3, find out exactly what your closing costs are going to be. Just like when you initially bought a house, there are closing costs. There's 2 things. You can either pay the closing cost up front or you can get it built into the loan. In my opinion, I think you should just pay that up front if possible, get it out of the way, and that's important for step number 4. So let's move on to step number 4. Find out and calculate your break-even point. So when I say break-even point, I'm talking about taking that closing cost from step number 3, whatever that number may be, it's going to be different for everybody. You take that closing cost and you take how much you're saving from your current mortgage to what the monthly mortgage will be when you refinance, and how long it's going to take you to pay yourself back for those closing costs. So let's get a really simple example. Let's say your closing costs are going to be $3,000 and your savings is going to be $100 a month from your mortgage, from your current mortgage to what it's going to be when you refinance. It's a $100 difference, so you're saving $100. That means every month you got an extra $100 to pay yourself back from that $3,000 of closing costs. That means it's going to take you 30 months, so right below 3 years, to pay yourself back for the closing cost. Then thereafter, that's all savings. Your break-even point is very important because it really depends on how long you're going to stay in the house. For example, if you using the current example that we're using, $3,000 closing costs, it's going to take 30 months to pay yourself back with $100 savings. If you're only going to stay in the house for 3 years or less, it's not worth doing. If you actually stay in there less than 3 years, you're losing money. So no good. If you decide to stay in 5, 6, 10 more years, then yes, there's a significant savings of that $100 every month. In my opinion, take that $100 and apply it directly to the principal. In next week's video, you'll see why I'm saying to do that. Most people don't understand how the interest rates and payments on your mortgage work. But that's besides the point. Take that away. So with those 4 things, I think you'll be in good shape to decide whether refinancing your home mortgage is for you. So I hope that helped. I just wanted to make this quick video. If you do have questions or need more clarification, as always, reach out to me in any form of media, whether it be here, YouTube, Instagram, Facebook, email, text, phone call. I enjoy talking to all of you guys. So have a great week, and I will talk to you guys soon.